Welcome to Dollars and Cents TV. My name is Cynthia DeFazio, joined today by Todd Bauman, founder and CEO of Bauman Wealth Advisors. And to our viewers at home, we have a very important topic to talk to you about today, the great wealth transfer. Well, what exactly is that? There's going to be trillions of dollars, or billions, I should say, passed down to generations in the next few years. And how does this impact you overall? Is it going to be a tax trap? We're going to talk about that. We're talking about generational wealth in today's show. So we thank you so much for being with us today, and we're going to get right into it. Todd, how are you today?
I'm great. How are you today?
I am fantastic. Thank you so much. I'm so excited about today's show. And I know before we get started in that, I just want to say thank you for always taking the time to come into the studio and do the shows, because I know that you've been so busy. Your office is seeing so many new people now because your show has been performing so well. Yes. And yet you always make the time to come in.
Well, I love doing this, Cynthia. This is truly a passion of my life, to help as many Americans as I possibly can, our company, obtain the financial freedom to truly start living their best life.
Yes.
You know, we're seeing a lot of people are not living their best life because they might be afraid to be living their best life. They don't know they can be doing it, or they're afraid of spending that little extra money because they might run out of it.
Yes.
And so that's why we're really big on proper planning. You know, like the way we equate this, Cynthia, is like you own some land, right? But just because you own land doesn't mean you're ready to build a house on that land.
That's true.
You need to have plans. You need to have a framing plan, plumbing, AC, electrical plan.
Yes.
And your life, your retirement, whatever you want to call it's the same way. Just because you have investments does not mean you're ready to go out and buy that house or take that trip or retire.
Yes.
Right? You need to have plans in place to have, hopefully, the best retirement, the best whatever possible.
Right. To thrive and not just get by.
Exactly.
I love that.
And that's what we're trying to bring to the table for as many people as we can possibly see.
And you do that every single week, and you do it so eloquently. So thank you so very much.
Thank you.
So this subject is very interesting to me, the great wealth transfer. This is going to be the largest wealth transfer in history, and it's currently underway. Todd, a staggering 80 to 100 trillion. I got that number right the first time. I thought it sounded too high, but it is indeed trillion, projected to transfer over the next 20 to 30 years. And when you think about that, baby boomers and Generation Xers are passing assets to Generation X and millennials. I always get those messed up.
Yeah, I know. I know.
And so what happens then? The question is this transfer guaranteed? Is this something that you see definitely coming down the pipeline, Todd?
Oh, absolutely, Cynthia. But I mean, when you say 80 to 100 trillion, all I can think about is the taxes that the government's going to get off of that.
Yeah, I think they knew that, right?
Yeah, I mean, it's like, holy moly, the amount of taxation that's going to happen, which is why we're really big on, and we stress to our clients that, you know, do the planning now, right? So you won't have these problems down the road. And so you're looking at tax planning, which is really big. We do tax planning and tax preparation in-house, right? And so you need to think about some of your accounts that you have. Like, I think 401ks serve a purpose for a lot of people, right? You're working, it's kind of a vehicle that you can put money into while you're working. It's tax deferred while you have it.
Yes.
When you retire, you need to roll it out of there into an IRA. And I say that because a lot of people leave their 401ks behind when they retire or leave, and that's not a great idea. So you want to roll it to an IRA. But the problem, Cynthia, is down the road is when you hit the magical age of 73, the IRS comes a knock-in, and they want you to start taking out your RMDs. Right. And then when you pass, you've left this taxable account to your heirs. And what a lot of people don't think about is your heirs, your children, or whoever you left it to, are probably in some of the highest earning years
100%
of their life.
Absolutely.
And so you just threw fuel on their fire.
Wow. Do you think families will pass less than is expected because of that? I mean, I don't know how you would do that. Maybe if you just decide to go another route, but one of the questions on here, will families pass less than expected?
Yeah, I mean, Roth conversions could be a way to leave more to your heirs.
Okay.
It's not for everybody, but here's what I stress at every one of our events, everyone we meet is do the analysis today so you have the data to make a better decision.
Yes.
We're
yes.
seeing a lot of people who are not even looking at doing a Roth conversion for whatever reason, but look at it, run the numbers and see, does it make sense or not? You don't have to do it, but you can make a better informed decision if you had numbers and data in front of you. And if it does make sense to do it, which might be a good opportunity because we're in some of the lowest tax brackets in the last 40 years.
Yes.
37% is our highest tax bracket. Do you know what, really quick, do you know what our highest tax bracket ever in recorded American history was?
I do not, and I don't have time to chat GPT
1944, 1945, 94%.
Wow,
Yeah, so-
94%.
Yeah. Could you imagine going to work back then, you make
No.
$100, you give the government 94%, and you keep $6?
I cannot imagine
It's like,
that.
why on earth, why do you even do that, right?
I know.
But the point is we're safe for the next few years because Trump renewed his tax laws. And I don't
Yes.
care what your political affiliation is by any means, but my point is
Right.
there's a very high probability taxes are going to be going back up, which can impact you on your income. And then, God forbid, something happens to you, your heirs are going to be getting whacked even higher as well. Because you're giving
Absolutely.
them more income from your IRA.
And when you think about it, it's going to be, Todd, a lack of coordinated estate and tax strategy that's implemented if someone does not take action today. Because now that we know that all of this money is coming down the pipeline,
Yes.
the easiest thing to do would be to take action and to make some changes today. Wouldn't you agree?
Yeah, absolutely. Because in a trust, I know we've had another show in the past where we talked about creating a trust, and those assets could pass tax-free to your heirs if they took them right away. But some heirs will hold the house in the trust, for example, and sell it a year later, and it could have a gain. So that's another taxable event on those type of assets, along with your IRA assets as well. So very, very important. Do this planning, get the plans in place so you can build the best retirement house, the best lifestyle house that you can possibly have, which will hopefully take the stress, the complexity off of your plate to allow you to have the freedom to truly live your best life.
And I know that you're so passionate about this, Todd, but estate planning must also be coordinated into the tax plan, correct, for it to make sense for the people in the viewing audience?
Exactly, because we've had, I know Vincent, one of our advisors, met with a gentleman, and he had his trust on as the contingent beneficiary of his IRA because his advisor didn't tell him otherwise, right? He didn't know that when that happens and that client passes, his trust has 5 years in which to cash in that IRA on behalf of that person. The successor trustee is now acting as a fiduciary on behalf of that trust for the beneficiary's sake. They're responsible for doing the RMDs to the beneficiaries. They're responsible for doing the K-1s, the tax returns. Like, you literally just dropped a bomb to your heirs by doing that.
Wow, Todd, people need to take action today. Thank you so much. To our viewers at home, there's a number for you to call on your screen, and we welcome you to call in now. On today's show, we are talking about the great wealth transfer. As we mentioned, there are going to be several trillions of dollars being passed along to generations to come. You need to be prepared for it, whether you're the person that's planning to pass this on or if you're going to be a recipient. You need to have a proper estate plan and a proper tax plan. Well, how do you get that? And it's all encompassed in one holistic retirement plan. All you have to do is call the number on your screen, or we've made it even simpler. Simply grab your smartphone, open up the camera app, and just click on the QR code at the bottom corner. That'll take you right to the landing page of Bauman Wealth Advisors, and you can schedule your time accordingly for a complimentary and life-changing consultation. We'll be right back momentarily. Don't go anywhere.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter. The one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Welcome back to Dollars and Cents TV. My name is Cynthia DeFazio, joined today by Todd Bauman, founder and CEO of Bauman Wealth Advisors. And today's show talks about the great wealth transfer. Trillions of dollars will be passed along to generations to come. And whether you're on the receiving end or you're going to be on the giving end, you need to make some changes today. Make sure that you have a structure in place that's going to suit your needs and your loved ones. Todd, I know you mentioned about having a trust for 5 years, if you will. Is there a different way to approach this? Is there something else that people can consider?
Yeah, absolutely, Cynthia. So the trust is a way of leaving your assets to yours with the IRA being the beneficiary, or the trust being the beneficiary of the IRA. But if you can have people on there instead of your trust, that's a better way of doing it, because people like your kids have 10 years in which to cash in the IRA instead of 5 years of running it through the trust.
Okay.
Yeah, so that makes it much better, because then each kid could have their own share of the IRA from mom and dad, right? And then they can do whatever they want. Kid 1 can cash it all in at once. Kid 2 can stretch it out over 10 years, etc. But when you run it through the trust, it's just a much more complicated method. We used to have the stretch IRA rule, but then the government sat back and was like, oh, that's a really good idea. I think we're going to get rid of it, you know?
Yeah.
And so they unfortunately got rid of that for us as advisors to use for our clients.
Yes.
So now you basically have 10 years if they're kids or non-spouse beneficiaries, and 5 years it's a trust. And the trust is just not the best way to do that. Yeah.
So I want to ask you, traditional IRAs, do they transfer as ordinary income? Is that what you see?
They do. So
Okay.
yeah, so your IRA is considered income. So when you take out distributions, you get a 1099 and you declare that on your tax return.
Okay.
And your heirs do as well. So when they get their share of the inheritance, they will have to get that cashed in within 10 years. And if you were taking your RMDs, required minimum distributions, that means you're 73, you're starting to take your required minimum distribution out, and you pass, your heirs will have to continue the RMD and get it cashed in within 10 years. They will get a 1099 on that distribution, and they will add that to their tax return, and it goes to their bottom line, which is their AGI, adjusted gross income.
Wow.
Right? And so really, really important. So we offer complimentary consultations, Cynthia, and
Yes.
in there, we're looking at this for all of our clients, and we're asking them, you know, what our first appointment process is called DREAM. Right?
I love that.
So we actually have it a 3-step process: dream, create, and then live.
I love that.
And so our complimentary consultation is called our dream appointment. We want to dream with you, right? What does that
Yes.
look like? What does your life look like? What does it look like when you pass to your heirs? Do you want to leave them a little? Do you want to leave them a lot? You know, or they get what they get, right? And so if you want to leave them as much as possible, then we circle back and we look at your lifestyle. We're looking at your taxes. Should we do some Roth conversions? That's a good way to leave tax-free income instead of taxable income.
I'm so glad that you brought up the Roth conversion. To the viewers at home, if they're just hearing this for the very first time, talk a little bit about that in depth, Todd. What exactly is a Roth conversion, and how can this help alleviate some of this great wealth transfer?
Yeah, so when you went to work, you got a paycheck, Cynthia, and you took some of that paycheck and you put it into an IRA or a 401k, and that contribution has not been taxed. And then the IRS lets you grow it tax deferred, and then at 73 or your RMD age, you've got to start taking it out, and that becomes taxable income.
Okay.
A Roth is tax-free income. So you can either contribute to a Roth today, or you can convert your existing IRA to a Roth. Now, those conversions are taxable conversions. So whatever you take out of your IRA and you put it into a Roth, that is a taxable conversion, right?
Okay.
But now that Roth grows tax-free, and then when you take money out of it, it's tax-free distributions. And when you pass, all that money in your Roth is tax-free to your heirs.
Wow.
Right. And so in some of the lowest tax brackets we've had in the last 40 years, it might make sense to do the IRA conversion today, right? Pay the taxes today or spread it out over a couple years. You don't have to do it all at once, right? Spread it over a few years, maybe 2 or 3. We map it all out for you, so you don't even have to worry about it.
I love that.
Yeah, I mean, that's our whole tax plan analysis tells us everything. And then convert it, pay the taxes today, and then leave it alone if you can. Let it just build up, get bigger, bigger, bigger. And then if you need some of it, you can take some of it out for yourself, tax-free, or you pass, boom, tax-free to your heirs, and you're not dropping a bomb onto your heirs. You're leaving them even a bigger present.
Which is truly a gift when you think about it.
Right.
Tax-free. Talk a little bit about when it comes to tax planning, especially with retirement planning, why do so many people skip that step? Because so often when you think about it, people in retirement often think that taxes are going to go down, but that's not necessarily the case. So talk about why you incorporate tax planning as well, Todd.
Well, I think, Cynthia, a lot of advisors specifically don't really get involved in the tax planning because it's like free work, meaning, you know, they don't make a lot of money off of that.
Okay.
Right? They make the money off of holding your IRA or your brokerage account, managing that for you, charging you a fee or commissions to manage that money for you, and all of these other services. It's kind of like gratis, meaning the estate planning, you know, the tax planning. There's not really a lot of money in that for you. And our theory at Bauman Wealth Advisors is different. We have what is called a family office approach, meaning when you come in and see us, we can manage your money, right? We can build you a financial plan. We can do an income plan for you. We can do a tax plan. We even do the preparation. We can even do the estate plan and preparation all in-house. So we come on. Yeah, it's pretty cool. We did this a long time ago, and it's game changer for our industry, right? And so we're acting as the coach to your team. That way you don't have to worry about trying to coordinate all of this out there. You know, we act as the coach to your team, and we make sure you're on the right track. Try to reduce the stress as much as possible so you can go out and just live the best life ever. Because we're only here once, Cynthia.
Yes.
You know? And it goes by so quick. You can't waste time. You gotta go.
Live each day to the fullest. You know, and Todd, especially in their retirement years, I know we've talked about this, but people have worked their entire life, they've amassed this nest egg, and then they're afraid to spend it. And really what they need is a proper plan in place. Wouldn't you agree?
Cynthia, if you had an income plan and we show you how you can take out an extra $1,000, $2,000 a month, right? And we test that, Monte Carlo testing, 1,000 different scenarios. So if interest rates crash, market crashes, you can still take out your $2,000 a month, and you knew you never have to worry about it. Wouldn't that bring peace of mind to go out and really start living the best life ever?
Yes, 100%.
Do the planning now.
Todd, thank you. Viewers at home, do the planning now. But where do you start? We invite you to call the number on your screen. And what you're calling in for today is a complimentary consultation. Let Bauman Wealth Advisors get to know you one-on-one. What are your goals? What are your dreams? And what are your hopes for retirement? Most importantly, do you have a plan that's going to get you there? Well, if the answer is no, you owe it to yourself to pick up the phone and call in today. Schedule that consultation where you receive one-on-one information, and you'll get to have peace of mind when you walk out the door. We've made it even simpler. You can just grab your smartphone and simply click on the QR code at the bottom corner of your screen. That'll be the fast track to get on the schedule of Bauman Wealth Advisors. Today's show, we're talking a lot about the great wealth transfer, all of these funds that are coming down the pipeline. We've talked about tax planning, about Roth conversions, but all of this comes into a holistic retirement plan. It's what you're being offered today. Don't miss the opportunity. We'll be right back on Dollars and Cents TV. Stay with us.
When was the last time you saw your financial professional? Are you getting the most out of the strategy that was created for you? Although you've done a great job finding someone to help plan for your future, are you 100% sure that you were given the right strategy? We can help answer these questions and more with a complimentary second opinion evaluation. We will take a look at what you have in place and then help determine if you're well positioned to get the most out of your future retirement income. In the event that it is not, we can help by making suggestions and showing you how to get on the right path. You wouldn't get just one opinion when it comes to a major health decision. So why would you treat your most important financial decision with such disregard? Call today for your no-cost, no-obligation second opinion evaluation to see if you're getting the most out of your retirement income plan.
Welcome back to Dollars and Cents TV. My name is Cynthia DeFazio, joined today by Todd Bauman. He is founder and CEO of Bauman Wealth Advisors. And today's topic has been the great wealth transfer. If you're just tuning into this final segment, we've talked about generational wealth that's going to be passed down through just as trillions of dollars coming into multiple generations. So we want to make sure that you have peace of mind and you're prepared for when this happens. And Todd, obviously on the commercial break, you and I were talking about a client that you actually met recently. They saved $3 million and yet they were afraid to spend.
Is that amazing?
I'm sure the viewing audience at home would love to hear this because I enjoyed hearing it. So they saved $3 million and yet afraid to spend.
They did an amazing job, but they've lived their whole life so frugal, Cynthia, like they're still in that mindset, right? They're still in that frugal mindset, even though they're already retired. And I'm like, guys, you won the race. You're on the podium. Like, let's pop the champagne and spray it all over everybody and celebrate. You won the race.
Yes.
You know, but they couldn't grasp that concept. And I said, well, I got together with some of our team and we built them some plans. We built them a financial plan based off of their risk tolerance, their risk capacity, where they're at in their lives. You know, they were saying, you know, we've been kind of aggressive our whole lives and we want to tone it down a little bit. We're afraid of losing this. And I said, well, you've got $3 million, so I wouldn't be too afraid of that. And they're like, no, we still want some safe, right? And then they had their Social Security coming in, but we built them an income plan and showed them how they can turn on a massive amount of income for them. And we dream with them. You know, I started getting her engaged about like, what do you want to do with this? And she says, I want to do stuff with our kids and our grandbabies, you know, and he's like, I want to travel, you know. And, you know, I said, how important is it you leave it to your heirs? And he's like, they get what they get. And she's like, I want to leave them as much as possible. So we had to like meet in the middle, you know.
Common ground.
On the ground, right? That seems to be the common men's like, yeah, I'll let them get whatever they get. And the wife's like, no, I want to leave them. You know?
Absolutely.
Yeah, and so, you know, it's like, that was what we talked about in the first segment about having assets. It's like having land. Doesn't mean you're ready to build a house on it. You've got to get these plans in place. So we built them a financial plan. We had some safe money, some risk money. We did an income plan for them. We ran them until they're like 83 years old, showing them how they can just turn this amount on and go out and just live life and do trips with their kids and their grandbabies. We did a tax plan analysis on them as well, and looked at what the tax situation would be. And then we did an estate plan for them as well, because they didn't have an estate plan, you know, and it's like it's time to get that done.
Yes. And one of the other things that I think we should talk about, of course, because this kind of falls in line as well with just the whole overall retirement plan, a lot of people don't plan for long-term care. And we really need to talk about that because it can derail someone's financial plan if they don't have a plan in place for long-term care. So Todd, why is that important to factor in? Because so often people think, I don't need to have long-term care. Medicare, it's going to cover everything. That's not true.
Yeah, that's a good point that you brought up, Cynthia. So, look, if your $3 million net worth like this client is they can self-insure. Right. We had enough income to pay for it themselves. But if you have less than $1 million, then you have to ask yourself a very important question is how much do you want to protect your assets for you and or your heirs? Because Medicare only pays for the first 100 days, right? Of any type of long-term care facilities, right? And then the buck goes to you. You know, you have to pay for it yourself. So that's going to come from your income, your Social Security, your pension. And if that's not enough to cover the long-term care bill, then you're going to start diving into your assets. You know, and so what I have noticed, though, you know, I've been in this business for 32 years, and what I notice is people are staying home now, which I really like. So if you become ill and you're elderly, you're going to stay home and have nurses come to the house, which is a lot cheaper than going to a full-blown nursing home. So the costs are lower, but then at some point, you're probably going to get to the point where you're going to need to go to an actual facility. So we need to have a plan for that. And that's part of the planning process is we go over that with our clients, you know, how important is long-term care to you?
Yes. I love the fact that more people are staying home because it's more comfortable. You're more comfortable in your own surroundings, and people have more choices today, which I think is so incredibly important. Looping back to the tax strategies, if we could, just before we close the show, Todd, in your own words, with everything that we've talked about today, with this great wealth transfer, all this money coming down the pike, if you will, if tax planning is not incorporated, what happens? What do you foresee, and why are you so passionate about it?
Well, you're kind of just starting to build your house without a plan. You're not prepared. You could throw yourself into a higher tax bracket. So the tax bracket goes from 12 to 22%, and then from 22 to 24. So it's a 10% increase, right, from 12 to 22, and then from 22 to 24 is only a 2% rise. So that's not a big deal. But if that 12 to 22 could mean a huge amount of money to you and your tax return. So really important to dive into your tax return and compare that to your lifestyle and see what makes sense.
Todd, thank you so much. To our viewers at home, the number is on your screen, and we invite you to call in today. And what are you calling in for? The complimentary consultation with Bauman Wealth Advisors. Let them get to know you one-on-one, your goals, your dreams, and your hopes for retirement. As you can see from today's show, having a proper retirement plan is paramount for your retirement success. And it's easy to get one. All you have to do is take advantage and call in today, book that complimentary consultation. Click the QR code at the bottom corner of your screen. That's the fast track to get on the schedule of Bauman Wealth Advisors. Be safe, be happy, and be blessed most of all. See you back next week.